Good morning, Mark. And another fantastic topic we got today. Is your financial planning really free?
Ben, I think the simple answer to that is no. There's always a cost. It should be openly disclosed to you, and you should know what you're getting in return for that cost.
Hello, and welcome to Real Financial Planning with Ben and Mark, two lifestyle financial planners who are passionate about helping people understand their money and what it can do for them.
Yeah, so you said that there's always a fee that's involved, but so many people believe or understand that financial planning is free. Maybe the advisor gets paid somehow from the product provider or through commissions, but all the work that they're doing for the clients is free.
Yeah, Ben, I think it's perceived or missold as free, right? So it's don't worry about paying me. I get paid by the life company, or I get paid by the investment house. Making this perception that it's free, but there is actually a cost. The client is indirectly paying it, potentially not out of their pocket, but through that transaction, the advisor is getting paid. I think in a professional world, one which we like to think we work in, we inform our clients that yes, there is a fee. We work for a professional fee. This is what the fee is, regardless of how we get paid that fee, but this is what it is, and this is what we're going to deliver to you in return for that fee.
Yeah. So let's have a look at those two examples that you've just given us. I guess sort of traditionally, whether it's either with an investment or with some risk business, life cover, for example, how are people traditionally sort of paid? I think it's, they sell, let's say, for example, a life cover, then the company that's offering that will give the advisor a commission for selling that product. They should be disclosing how much they are receiving for selling that product. Sometimes it is revealed and sometimes it's not, or maybe it's kept a secret. But there is a fee or a commission being paid. And so I guess the real question is, for the work that they've done for that fee or that commission, has it brought value to you?
Yeah, I think it's the problem with that model is that it always requires a product to be sold. So we're not taking away the fact that the advisor may have done a lot of work up front, and they take on all of that risk. The downside is that there's always going to be a sale in order to get paid. And then there's the element of, well, did I tell you that I was going to get paid through the commission of the product that I sold you? And if it's via commission, ultimately it just means that the product that you're purchasing as a client is more expensive, because there's a fee baked into it. But I think let's not get too hung up on the way that the fee is paid. We've identified that there's ways. Let's maybe talk about, now that we know there is a fee, the important thing is, what are you getting for that fee, and is that of value to you?
Yeah, that's such a good point. And again, like you say, some advisors might do a lot of work up front, which is great, because they've then taken the time to get to know you. And I think that's the important part that we're trying to say here, is that it's the value for what you're paying for. So have they taken you through a process? Do you know that if you were to, for example, pass away, all your debts would be paid off, your family would have all the needs that they need? Or was it simply just saying, well, I'm comparing what you have now to something else that might be cheaper? That's just a comparison. And so are they getting paid are they bringing you value for what you're needing?
Yeah, I think it's the difference in the initial interaction between a professional financial planner and somebody who's just trying to sell you a product in order to get paid a commission. The professional planner takes time to get to know you as a client and as a person. And in both instances, there's a lot of work that goes on. But in the professional relationship, it's really unpacking you as a person, who you are, where you are in your life and what are the things that you want from your life, versus in a sales environment, yes, there's a lot of work, but it's really a shortfall analysis that's being done to say, okay, this is what you've got, this is what you need, and there's a shortfall, so I need to sell you something. Or this is the product that you've got, let me just do a comparison for you, which there's value in that. If the comparison works out to be better products or better terms of the cover and a better premium, but it's just a different type of relationship that you're buying into as a client.
So what you're saying, Mark, sorry, what you're saying is that there's basically sort of two types of advisor. One who would maybe only focus on the products. And so it's very a product related conversation. Whereas the other advisor or lifestyle financial planner, which we ascribe to, would focus on your life as a whole. So we're looking at all the pictures and helping you plan out your life. There may or may not be a product involved in that discussion, and we could also help with the comparison. But the main focus is not the product or selling a product. It's more about helping you in your life and your goals and making sure that these products help you to achieve your goal at the end of the day.
Yeah, I think that last sentence, the main focus is on building a relationship with the client and the lifestyle financial planner, because this is ultimately a journey, right? So there's a starting point where we get to know the clients and what they're about and what they want from life, and then we put a plan in place. And once the plan's in place, we have to walk this journey with these people, to help them achieve the things they want to achieve. I think maybe just to close, the important thing here is understanding that financial planning is never free. There's always a cost. And you need to understand what that cost is and what you're receiving in return for that cost, and if you value that or not.
Yeah. And I think it's again important to remember that there's nothing wrong with the fee or the commission that is being earned. Like we said, the important thing is you understanding what that advisor is receiving, and do you think that they have provided a service that values or that warrants that the value for the value that you're paying. If it's just been one email and they're receiving, something, I don't want to say an amount because it's all relative to different people, but will that fee justify that one email, for example?
Exactly.